Good evening. This is Ken at Tortoise Capital with a review of the weekend trading report for May 19th, 2018. Market is in bullish normal conditions on an annual basis. Looking at NDX 260, we're at the higher end of neutral at 70 out of 100. The threshold is 80 for overbought and 20 for oversold. The 10-day NDX, the short-term posture, is also at the high end of neutral at 69 out of 100. Price relative to the 200-day moving average is yellow bullish at 3.33%. So we're 1 1/3 percentage points above the boundary for sideways. Slope of the 50 stabilized at yellow bearish at -0.1. ADX remains a weak, untrending 14.9. The risk index is the 30-period moving average of the VIX divided by the 10. 1.0 is the boundary between risk on and risk off. The current reading is at 1.155, so we are into risk on conditions. Take that score, look at the last 5,000 trading days, compute the average and standard deviation to give us the risk Z-score. That's at 1.62. This is a 90-day histogram of that indicator. So we're 1.62 standard deviations above the long-term average, and that's been favorable for swing trades. However, anytime you see it rolling over at more than 1 SD above the zero line here, then that's a caution to beware of downside volatility spikes. So that makes us alert on intraday trading to protect our long side swing trades with some hedges, and also to be ready for that adverse one-day large range move. These are the holdings for blended monthly rebalancing for the month of May. Next reevaluation is due on or about 1 June. And these were the leaders in the clubhouse based on Friday's closing prices for these different portfolios. Just notice the strength in technology here. Theoretical exposure in ETF2 is at 80%, remains at 80%. We'll take a quick look at a couple different blended monthly rebalancing portfolios. You see the Russell 2000 has been the clear leader. Latin America is starting to suffer. In ETF 32, it's energy, commodities, and small caps. The technology is up there also. Weakness in Brazil and consumer staples. Dow 30, Intel had been the leader, but had a bad week. So I would be looking at Intel and Chevron both as opportunities maybe to buy quality on sale after that sell-off. The same with Cisco. It's had a great 6 months, but everything else has been pretty bland. It's below its 4-month moving average. That's why it's in cash. So I'm thinking with the strength in tech and a really harsh 1 week performance, that may be an overreaction. So that's what I look at the red and green in 1 week for momentum plays. Excuse me. In the sector spiders, oil and gas, energy sector has been solid, metals and mining, weakness down here in real estate, treasuries, and utilities. ETF Max looks at 500 different ETFs and ranks them again by the blend, and you can see where the leading candidates have been. Still small caps and energy. In the market health check, I added this little yellow band in here just to get a sense of where that from the top of the dragon's hump on this last little move and the belly of the dragon, I really see that sort of as the no man's land. We're above that right now, stabilizing at the outside of the river. Dragon is up, 30-period channel is up, 10-period channel is up, and we've had support here for the baby dragon is rising lows, and for the dragon itself higher lows. So this has been a healing 30 days worth of look back here. So these vertical blue lines are 10, 20, 30, 40, 50, 60 days of look back. The solid blue is 30 and 60, just as a quick reference. The red horizontal lines have been support levels that, if this price collapses, become price targets on the way down. But there's some significant or some support between price and that rising 200-day moving average. So there's some potential to the upside still. But it's got to get through 275 and that previous dragon hump to really make a run at the all-time swing high up here. You can see we're right at 5% off the highest high, so there's still room for tactical gains here. If it gets above 285, then it's free and clear. You can see in MACD histogram, the signal line is above the zero line still, and the Bollinger Band on that is getting ready to cross the zero line too. So this had been a long period of healing these last 30 days. So I take this as favorable price action, and it didn't collapse going into the weekend despite the bad news. I'm praying for the folks in Texas. But things are, I'm cautiously optimistic here on the basis of the market health check. ETF2 regional. EFA has been suffering. Latin America has been relatively strong. 8 of the 10 symbols are on buy signals. That keeps us at 80-20. Inside the U.S., actually I should say the S&P at 41 is better than the globals at 18, so that favoring the U.S. And inside the U.S., it's technology, then small caps, then large caps, then the mids. Market health check here, the world market model. Mixed bag here inside the U.S. Small cap growth is where it's at, but leaning towards getting some weakness. 41 is the S&P, 34 is the Dow, 53 is the NAS. Latin America doing well, but Brazil suffering. Philippines, and then a mixed bag all across China. This is a stock picker's market. Just a little summary about it. We'll see how you like that. This is how I read the strength and consistency scores. Looking at green and green would be great. Those are the leaders. They're doing great, and if I were to do this with a swing, I'm looking to reinforce the positive trend that the retail is in. Could I turbo this? Yes. And why am I interested? Because the winners are continuing to win. Green and white is something that was good on a consistency basis on the 10-week average and is now great. So it's emerging strength. My swing strategy would be to look to exploit new strength and very much turbo, and then because these are new leaders. So that would be something like the FTSE All World, Industrial Select, iShares Mid Caps, and so forth. And then so on all the way down through the various combinations of strength and consistency. Gives you my narrative assessment of it and the kind of swing strategy I would use to exploit it. I can really turbo all of these, but the ones that are capitalized and bold, those are really the ones I want to turbo the most. So green, 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 white, and then red, 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 yellow. Those are all the ones that I believe are optimal because they're at extremes. Those are the optimals for looking to turbo. Liquidity. Shifting to the daily. We've already seen that. Handful of dojis, a couple 5DDs, and a half a dozen auto framers testing out well. This decline in volatility is starting to drive the fraud quality numbers up. We had some breakouts here in United Health and Boeing. Plenty of these are on RSI2 alerts as well. In the ETF tactical, some breakdown collapsing here in Brazil and Mexico. Chat room subscribers should go take a look at the work we did this Friday in the framing out Brazil. It's coming to an annual critical state that is very interesting in both directions. I'll be talking about that for the swing trade FAQ this weekend. Yeah, plenty of auto framers to choose from. Pinch and stretch. First chunk, these are the ones that have the greatest price stretch above the river and then below the river in the column 2. Chunk number 2. It gives you the percent of the stretch from the Bollinger Band mean, and then how many standard deviation that represents based on that symbol's long-term look back. So the biggest winners, the biggest losers. No surprise here in Mexico. Frog Champion has been outstanding as an intraday candidate the past couple of weeks. And then the most compressed and most expanded pinch box. This is how wide is the standard deviation that constitutes the river. So the super expanded ones are ones that have been the most directional. This is how strong that directional move in Mexico has been. It's 4 sigma in terms of how wide the river is. Here you can see Mexico on a daily chart and just the width of the Z3 line, how wide the river has become. This enormous sell-off. You can see we've been trading a lot of this. It's one of our standard trades, so it looks a little messy here. But so this has been this is where we got short in the pocket. We reinforced on a collapsing dragon, and we're still holding 2 swing positions in this and exploiting the ride down. My stop on this would be down around to here. That's where I'll place my stop. Yeah, so that's what that expanded river looks like in that collapse. We have a number of super pinches. These are ones in which the pinch box has been compressed. You know, the width of the river is compressed, and all 4 of the regression lines are tightly clustered together. And so let's take a look at EFA as an example. You can see the pinching of the Z3 lines. We're right at long-term fair value here. What I like about this, we have a belly of the dragon, higher low. Here's been the stretch. There's fair value at the RL270. So I would be willing to buy this one on support. It finds support right here and makes a new high Monday. I'm in. I like everything about this. So this is where it should have failed, but it didn't. It went up, pulled back. Now, if it finds support here above that rising river, then this is looking really good. And then if it breaches 72.50, look out above, and the next target is 75. So I'm liking that. This was the ideal entry here in the pocket. You had a double bottom across the then you have an owl pattern right in here actually, and then that's a pocket entry on the second one. Again, I'll talk more about that for the swing course students. That's a self-paced course. You can start it at any time. There's a new crew of people coming in to start, I think, around 1 June that were in the residential course out in Cary in May. So you'll be in good company. Just drop me an email if you're interested. Auto framer, the usual suspects. Lots to choose from. Plenty of good reward to risk ratios. The usual suspects in RLFF. For the symbols in the top shelf in the green are the deepest value plays. So like 3M is 10 ATRs below its long-term fair value. Let's take a look at that one again so you get a feel for what that looks like. Yeah, that's what a deep discount, deep value looks like. It's not quite an owl yet, so I would be waiting for the owl. But this little move off the bottom here, that's 10 ATRs. So you could play it if you had played this from here on 2 ATRs. Your entry is probably right around here in the pocket, and you don't mind this at all yet. With the stop below the belly of the RL10, with this as your price target, you can frame some nice 2-to-1 trades in there. Daily squeezes. Again, these are poised for one-day pops because of the range compression from Friday. The regression line slope of the S&P is actually starting to look favorable. It's above the 0 line. That double bottom was put in place, and now we're above the long-term average and above the 0 line, which is that dotted red. The 10 had stretched and is pulled back into the rib to find support in here. This is room for another leg up to test 285. If it holds support at the edge of the river, that would be seen as very favorable. You see all the healing process that went on here. This is failure to fail with some upward pressure. And that's everything I want to cover. This is Ken at Tortoise Capital. Keep your risk measured and your powder dry.